Hello and welcome to another video. My name is Zexo and today we have yet another stock analysis video, this time on ASML. Now this one was actually requested by a viewer of the channel, name's on screen now, so I'm very thankful of their comment and I aim to give the viewers what they want, so here it is. If you have a stock that you want me to analyse, just put it down in the comments and I'll get round to it. And without further ado, we'll get straight into the video.
I fight to live, I fight to strive. One day I'll have what I want in life.
Okay, so we'll follow the same pattern like we've always done on this channel. We'll have a look at what the company does, bit of background, then we'll head over to Simply Wall Street, do the stock analysis on there, then we'll have a look at the fundamentals, balance sheets, income statements, that type of thing, and then we'll have a little look at Trading 212, see if the metrics there line up, and some other additional information, and then we'll get on with the conclusion. Okay, so what is this company and what does it do? Well, they have a very wordy and complicated way of putting it, but in essence, basically they make machines that make microchips, and these microchips are then used in every technology that we have. So the consumer base is definitely there. And they say right here, in fact, we're probably a part of the electronic device you're using right now, which is really not that far off from the truth. So with a growing population, consumer demand going up, more complex machinery, more and more chips are needed, and especially smaller and smaller chips. So a company like this is well suited to deal with that, and it will tremendously help out their growth and potential going forward. And the second thing they engage in is the software to actually run their machines. So it says here, if our hardware innovations are Batman, then the software is the Robin. So you obviously need both of these to go hand in hand, and when things need to be smaller nowadays, more software has to be created to deal with that, so there's just another avenue that this company branches off into, which is always something good to see. Okay, so now I've looked on their website, we'll head over to Simply Wall Street and have a look if there's any hidden things in the closet for this company. Okay, so now we're on Simply Wall Street, my favourite stock analysis tool, and right off the bat, we're looking pretty strong. I think might be the first company that we see this, no risks detected. Doesn't mean there aren't any, it's just not picked them up. But excellent balance sheet and solid track records. This is a snowflake as how it looks going forward. So it's got good future, good past and good health, low dividends and value. So we'll take a look at all that as we go forward. So these are some of the companies that compete with this company, but that doesn't matter for this. This just shows you how this price has been performing throughout. We've had a few like little dips, but nothing major, and then we're still growing consistently. That's good to see. I can show you this again in Trading 212. You can just see it a bit better there. Here you got the recent news and updates. Again, I'm not going to go into this in that video, but if you want to see this, then you can just go on Simply Wall Street and find it yourself. On the free version they have, you can find all these and open them up and read them. Okay, so now we've got shareholder returns. This is a nice one to look at. So we got 7 days, 30, 90, 1 year, 3 years and 5 years. And we can see that this company has been strong going forward throughout the 5 years. 3, it's just strong in general. Compared to the industry, this company has done better in the 1 year mark, the 3 year mark and the 5 year mark. And even better than the market, so pretty solid. And that's including dividend return there. That's the one in blue, so 757 there. So it's done quite well. You can see here the volatility of this company, which is lower than the industry. So again, another tick for this company, and solid so far. Can't fault it. Here, what it says about the company. A bit more, founded in 1984. Got quite a few employees. Then tells you what it does, but we've already discussed it. If you want to just pause the video and read this, you're more than welcome to. We're going to skip over this part because then we're going to analyse it further anyway in a minute. So it's not too much of a concern. That's like a company overview, that's what section we're in now. So now we'll go into the nitty-gritty stuff. Now, valuation. This is where the only negativity is really, in my opinion, for this company. And it's clear to see why, with the company being so strong in every other avenue it is in, especially with its predicted growth in the future. People like to overvalue things like that. Same with Tesla and similar companies. So if you can get this company a bit of a discount, then obviously that's the best. If not, it's up to your perspective, your risk tolerance. For me personally, I'll just go into that at the end, don't need to do that now. So price to earnings ratio, again, with the valuation being so high, this will obviously be high. The industry itself is high as well, because that's the type of industry it's in. And again, all these will be high because of the valuation. Okay, so the company revenue, earnings, free cash flow and cash from operations are predicted to just grow steadily throughout the years. Obviously, no one knows, like, this is a smooth graph and this is not exactly smooth, so this is just how it goes when people they just want to stay conservative. But this company has done an amazing job of exceeding expectations with 5-year, 3-year and 1 year like we're seeing, so who knows. And these are the forecasted annual growths. You've got earnings growth and revenue growth. So the company is predicted to grow a little slower than the industry. However, we have not seen this in terms of share price at least, so again, we can't be sure that this will happen, but either way, they're not far off, so I'd be happy with this personally. Above the saving rates, always good. And then this just repeats what we've seen in this graph. Future return on equity is going to be high, well predicted to be high in 3 years, so that'd be nice. It's quite a lot higher than the industry there. Like I said, with the consumer demand, growing population, more complex technology, more chips are needed, these machines will then need to be used more, so it's just a win-win for this company. Okay, so now we're on past performance, and you can see that this company really did ramp up from 2018. It's sort of just trading nicely alongside, still growing here. This would have been the time you'd want to pick up if you'd known about it back then. I didn't start investing back here, so I couldn't, but subsequent from 2018 you've had that rapid revenue growth. Everything else has kind of stayed along the same trajectory, and then past 2021 has gone a bit there, but that's to be expected with the final quarter of the year. Things just like that tend to happen. If this trend continues going forward, then we should be looking in good health. You got past earnings growth here, past 5 years and past 1 year. 5 years beating the industry and market, and then the last 1 year is beating the market but not the industry. Again, comparing company to a market is not the best thing in my opinion to do. Comparing company to industry is something I do look at. However, I'm not too concerned on this one, especially with the last year being a time of you know what, so kind of an unfair thing to sort of put it against. And this company has seen some ridiculous growth in the subsequent years, the previous years, so it's not too much concern for me. Okay, so we've got return on assets and return on capital employed, so how well it's using its money. So both of these are higher than the industry, which we love to see, and another strong point for the company. You'll see a trend like that throughout this company, especially now we're moving into financial health, because yep, this is what you want to see. Short-term assets outweighing liabilities in both the short and long term, so it's got enough there, which is lovely, and this is what I look for in companies. This just means that any problem it has, it can use some of its assets to pay off any of its liabilities. There's a thing, borrow against your assets. Companies or banks give you like lower interest rates if you borrow against your assets, because then they can use that as collateral, but obviously this has more assets than liabilities, so they'll have a very low interest rate on the debt they do take out, and they can pay it back really easily if they need to, so that's just what that's about. And here we see the debt to equity. However, the cash and equivalence is above the debt, so they can just pay down that debt with their cash, and the equity is well above, so it's really not a problem. They won't have any issue with this that I can see. Again, here it has like a reducing debt, but it's not actually a bad problem. You don't always have to reduce debt as long as your other things are increasing along with it, so they can manage it. Then they might be using this debt for good things, buying more machines or whatever it may be. expanding. Doesn't always have to be a bad thing. There is such thing as good debt. So you got cash and short-term investments of 4.5 billion, a debt of 4.1 billion. So they could just sell all that, pay off that. Easy. Not a problem at all. Now you do have a dividend with the company, not the highest obviously. But it does pay some sort of dividends, so it could be one to hold for the long term, see how the dividend increases over time. Again, I'll talk more about that in my conclusion. Okay, so we can see that it is paying a dividend per share and has been increasing throughout the years, which is nice. Earnings per share has increased alongside that, so that'll keep up with the free cash flow, which is lovely. So if this continues going forward, in 30 years if you hold this company, then this might rise to be a higher percentage. Who knows? So again, payout ratio will then be small because they're not paying much out in dividends. So and it's predicted to actually reduce from 25% to 22%. But we shall see. Either one of these is not an issue anyway, so not concerned for me at all. I cannot see any shares sold or bought like insider trading, so neither here nor there. It's not a bad thing nor a good thing, just neutral. And then this is the ownership breakdown if you was interested. So general public, that's like me and you, own 44.2% of this company, so we have quite a nice weight in this company. And then shareholders have not been meaningfully diluted in the past year, which is nice to see. Okay, so now I'll take a look at some of the balance sheets and income statements, and then we'll go over Trading 212, have a look at that. And yeah, then we'll wrap up with a conclusion. Okay, so now on the income statement of ASML. So we can go back to 2017 and then all the way to trading 12 months. We'll have a look at total revenue. So from 2017, 2018 increase, another increase, and another increase. And yet again, another increase. So right off the bat, that's a fucking thumbs up from me. You've got gross profit, you've got increase, 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 and guess what? Another increase. It's just lovely when you see a income statement like this. Just wonderful. Net income, oh, guess what? It's the same story. You got increase. Oh, we have a decrease from 2018 2019. Oh, by like 20,000. Can't have that. Oh, and then increase. Oh, and then look at that massive increase. So I'm pretty happy with these numbers. Now on to the balance sheet. Okay, so now we're on Trading 212 for the balance sheet. I couldn't actually get it up on Yahoo Finance, so that's why I'm here. Want to be here anyway for the next portion, so might as well. Head 2018. This is balance sheet annual, so we've got total current assets here. We've already seen how this trend goes in Simply Wall Street, but this is just a way of checking if those are accurate. So you've got total current assets of 10.53 billion, and you got total current assets here of 3, and then total liabilities of 8.5, so that beats both of them. And then the same story with total assets, obviously beating them by quite a lot. So that all adds up. Goes to 2020. Do they still continue? Of course they do. Got total liabilities now of 13 billion, so it's a bit of a step up from 2018. However, you got 15.93 billion, so nearly 16 billion of total assets, and then total current assets of 15. Total assets are now 27.27 billion, so we're sitting good. We're easy. You can have a look at the financial summary of this, so it'll show you where the company's been going for the past few months. So 9 months ended, revenues increased 40%, net income increased 87%, sales increase of 43%, and there's just increases around the board. So again, here it has some of the information: market cap, dividend yield. I want to go into all ratios and take a look at the free cash flow per share. So if you go per share data, you can go to cash, and then you got free cash flow per share trading 12 months of $21.35, dividend per share of $3.14. So again, it's covering this fine. Got return on asset, return on equity, and return on investment, all looking good. free cash flow of 8.83 billion, so it can pay anything it has, and we're looking good. Alright, so now for the conclusion. Okay, so to conclude this company, in my opinion, it's a very good company. Like, there's not much you can fault with this company. It has excellent future prospects, it's in the right industry for the future, its income statement, its balance sheet, its cash flow, all these things are strong. Financial health is amazing. The only negative, like I said, was the valuation. Now, valuation, when I talked about that, I said about your perspective, your risk tolerance. That's all it will come down to, is you. What would I do personally with this company? Now, I actually am debating whether to put this into my portfolio. The only reason that I'm not is because my portfolio, I want a higher dividend yield. Now, I could replace one of my existing companies with this, and that's probably one of the more likely things I'll do. But I'm just aiming for a bit of a higher dividend yield in my personal portfolio. I know it's not that much of a problem because I'm younger, I have more time, blah blah blah, but I also want to retire earlier, and you can do that with a higher dividend yield. So that's where I'm coming from. I'll keep you updated. If I do change this, I'll probably do a portfolio video on my channel so you can see which ones I own and blah blah blah. But thank you very much for the comment to do this video. I did have it in a stock portfolio a while ago. I just never really, that was when I was new to investing, I didn't really know what I was doing, so it's good to revisit it now. At the end of the day, I'll keep saying the word because it is my favourite word and it's the most reliable word you can use for investing, is perspective. It's called personal finance, not group finance. I can sit here and do these stock analysis videos for you. I can give you numbers, I can give you graphs, I can give you my opinion. Does it mean anything? Up to you. You'll either agree with it, you don't. But again, perspective. I don't claim to be an expert on this. I'm not a financial advisor. It's not financial advice. It's just my opinion about the company. You do with it as you wish. So yeah, that's pretty much what this all comes down to. So I hope you enjoyed and got some value out of the video at least. If you did, consider subscribing, hitting the like button, comment on any stocks you want analysing and I'll get to them like I did this one. Sorry, it's just been a bit of a hectic schedule for me. I did want to upload sooner, but I've just started a new job recently and that's took up most of my time, so now the weekend's here, I'm hoping to get one out today and then maybe tomorrow as well. Fingers crossed. Check out the links in the description. Trading212, get a free share when you use that. Maybe it'll be ASML, who knows. Also, you got crypto, you got Blockfi and Gemini. Gemini's where I buy my crypto and Blockfi is where I store it for additional interest. And I'll catch you in a bit. Peace out.
Tell me pretty lies, look me in the face, tell me that you love me, even if it's fake.